Okay, so let's start as we have only 30 minutes and let's talk more about this contextual and abandoned finance. So maybe let's start with this banking solutions. Michał, you first, please. As an ING bank in Poland, you have a great example of this contextual SME finance. Can you tell us more about this solution for placing leasing financing, so leasing finances for financing for SMEs, offered in the Imoje. Imoje is the name of the brand payment gateway. So it's a gateway Imoje and you place the leasing there.
Yes, you're right. This is quite fresh, you can say, baby of ING. We call it Lease Now. This baby is, and this Lease Now is available in Payment Gateway. You can use it as a payment method. It's quite easy when the client is using Imoje. It also have access to Lease Now. The solution is very simple. When you take, for example, equipment or machinery, you can use a payment method as a Lease Now. And the path of going through the leasing is very simple. It's fully digitalized. It's online, and on the end you also sign electronically the agreement, and this is something new also which is introduced in this Lease Now concept. We use the digital signature which is authenticated. It's used as a signature digital in Poland. And to also do this, on the end you have payment which is finalizing the deal, and then you take the machinery or equipment. It's quite easy. I can add to this, but as to the panel topic, embedded finance, I think that embedding finance is quite extending the traditional way of financing in banks. It's not only but replacing what we already do in financing, but it's extending these solutions. It's adding value to be as closest to the client as it can be, because you are immediately in the period of time when the client is making a decision of buying something, not thinking to take a loan or to pay something, but buying something. And this is also what we in ING currently think is the crucial thing to do when developing financing products and processes.
Just a little bit back to this Lease Now, which is offered in this payment gateway. Could you give us any numbers or any just trends, how it's developed? I know that it's something fresh, but maybe...
Actually, it's very fresh. It's from a few months already, so it was launched this year. It's not that we are having big numbers of transactions now that we are already happy of, but I think from the launch, it's already exceeded, I think, 100 transactions, which was financed. And of course, this is not our goal and ambition to have such numbers. The numbers are much more bigger of ambitions.
Yeah, being such a big bank.
Yes, of course. But we think that this is future, and we just started it. And as an agile way of working, we adopt it. And we are adopting it every time to the need of the client. So this is step-by-step learning and doing. So this is the way we are doing it.
What is the maximum ticket of the transaction? Do you know?
As I remember, I think it's currently around 200 Polish zloty. But maybe I'm wrong because it was changing.
Okay, understand. Okay, cool. Thank you very much. I think it's like a great example exactly to putting leasing, which is like a solution for SMEs, not only, but for companies, in a gateway, payment gateway, which is like mostly for customers, not for businesses. So it's great idea. Thank you very much for that. As we talk about the technology, maybe let's switch to Comarch. Karol, you represent Comarch, one of the leaders in IT solutions in Europe, huge company from Krakow, from Poland. You have, of course, a bit of experience in this embedded finance, as you focus mostly on invoice factoring and the factoring market. Please tell us more about your experience in this embedded finances, and perhaps if you could give us also some statistics, some figures.
Thank you very much. My name is Karol Leszczyński. I think if we are thinking about the embedded finance, we should concentrate about telling about the key players that are there. And one of the players are financial institutions, of course, IT providers, And the last player I would like to talk to you, I will talk at the end. So when we're thinking about current times, when the liquidity is the most important thing right now, the money, the cash is the king, and the easy access to the cash. I think that I don't know the product that works better than factoring, because easy access to money is the essence there. And if we take the cooperation with the insurance company, when we know about our debtors' problems, because if I'm a person who's running a business, why should I care about my debtors or contractors' problem? Let the insurer do that.
True.
And looking at the statistic, which makes me very happy, is that right now in Polish market, according to the Polish Factor Association, 55% of factoring agreement for SMEs or corporates signed there.
I think new one.
New
agreement.
In cooperation with insurance company, which is very good. I think the other key players. I remember when I started working at Raiffeisenbank Polska, at the time it was almost 50 years ago, and I was a youngster. And the head of sales asked me a question. What, in your opinion, ties the client most to the bank, to the financial institution? Yeah?
That.
And I answered overdraft, factoring, investment loans, etc. Okay, shit, okay. I'm not denying, but I will return to this question with you 6 months from now, 1 year from now, 3 years from now. And then I understand it is the payments. Because when we want to call the home bank for the client, it's the payments. For example, it's paying the payments for the salaries and for the tax obligations. But the most important key player, in my opinion, in this case, are the end users in this embedded finance. Because at the end of the day, they have the best voting tool that the world have ever seen. In fact, we all have this voting tool. It's attached to our body. It's our legs. Because if we are not happy with the product, we will go away. Yeah? So please remember that at the end of the day, the end customer is paying our salaries, paying our child education, our vacation, etc. So we need to remember. And to make a conclusion, I was thinking the other day about my 2 daughters. They are 5 years old, Alicia, and 1-year-old Caroline. And I'm 100% sure that in the future, they will never enter the financial institution branch or building. Everything they will do online. I'm not sure which generation they are.
On a TikTok, maybe.
On the TikTok, maybe. I'm not sure what generation they are, but that's the future. They will do everything online through their phone, through their mobile application, or through their laptop.
They are the future generation.
The future generation, yeah.
Okay, thank you very much for that. As an IT company, you see many markets and everything. We will come back maybe to the technology later if we will have some time. But let's move on. Chris, as your presentation was just in the beginning, and thank you very much for this presentation. It was extremely quick because I know you have just 15 minutes, but I appreciate for that. You said that this customer centricity is something what is crucial now, but the whole path and way how the customer, through this whole life, this finances should be around him. So as we spoke also before the panel, so this contextual and abandoned finances for you means this customer-centric?
It's basically, for me, indeed, and this is the same way like Carol just expanded here, it is basically the idea that you know what customers could potentially want, but beyond the idea of a product, beyond the idea of a specific loan. Of course, in the end, it's a loan that you are accounting for, yes, but it's irrelevant for the client whether this is, you call this loan A, loan B, or loan C. The client wants to have a solution presented. And the solution needs to be coming in from a system that allows you to generate these offerings. And for me here, it's important that really you have this customer-centric approach so that you know your client very well, that you have the client building up an experience with you, the knowledge about the client is possible, and then you can actually, and as Carol, as you just said, the transactions, the payment transactions are quite important. For me, that's true, but for me, the payment transaction triggers an offering based on the static data, on the qualitative data that you have in the system. The client might make specific payments, which then give you the information that he's now starting to do business in a specific region, specific counterparts, and that allows you then to offer specific solutions to the client. But based on the combination of the transaction, as well as on the information that you have collected. And the more and the longer you collect information with the client, the better it is possible for you to offer a loan. And this also solves a huge problem that we currently see with SME financing, offering loans and something to SMEs, because usually the problem is we don't have the experience with the client. With having this customer-centric approach, you collect a lot of data and then you allow the client to gradually go from a small loan to a larger loan. Finally, the last point here is really this flexibility that you are reacting to customer needs on an ongoing basis. The same way like we see innovative products today like factoring or like buy now, pay later products, rest assured that in 5-10 years there will be other products. So we need to be able to make sure that we have a platform that allows us to, on an ongoing basis, innovate, produce these products quickly for the client, not have a 2-year product development and testing process, but being able to derive these products within weeks and offering to the clients. And that's actually where customer centricity comes in, together with this embedded finance and based on a solid data structure that you have to derive that information or to derive that assessment.
The question is like, could you tell us about a little bit more? You show what you do as a company. So you support not only banks, but also fintechs?
We support banks, we support funds. Not necessarily, I mean, we don't see ourselves as a fintech company, we see ourselves as a technology company in the finance space, because we don't have our own loan product or we don't have our own services, but we basically see ourselves as the workflow manager that has the right structure of lending products so that we can compare whether this is a retail loan, a corporate loan, an SME loan, all in the same scheme so that they are comparable and they allow us to derive the right information from that. That's where we see ourselves placed. And then from that you derive either on our own system, because we're also based on microservices, we're based on API, you can do our own systems, or you can integrate other existing product partners to the platform where they are.
You emphasize the word microservices, which we spoke today with Carol before the panel about it. If I just make the microphone to this, thank you. Thank you. So we spoke as Comarch is also supporting banks, financial institutions, not only because you are huge and everywhere. The question is how the technology can be used to develop exactly this topic, this abandoned finance. And I know that you have a great example. My company is also a part of this example.
Yes, I think we need to understand what microservices are, because a few years ago, the software companies, the softwares were thought as a big monolith. And right now, the modern technology, when I'm thinking about factoring right now, we have few modules like for example, agreements, payments, user management, etc. And thanks to microservices, right now we are able to develop each of these modules separately. Of course, they are cooperating with each other, they're speaking with each other, but we are sure that if we are improving, for example, payments, we will not distract the work of the agreements module. So I think it's very important to understand that. And what the technology helps right now, we developed at Comarch a platform called Appfino, and I think it's the perfect example of an embedded finance. When we have, as a Comarch, we have, for example, almost 25-30% market share of ERPs. So just imagine how many
ERPs on the Polish market.
In the Polish market. Just imagine how many clients have an access for different financial institutions, supporters, providers in one platform. I'm thinking about factoring as my main branch. For me, the easiest way to see is that we have different segments of clients, like micros, SMEs, corpos. So in my opinion, the perfect way to use that platform is to have, for example, two factoring companies like SME, which is specializing in micros and SMEs.
Which was first on this platform.
And biggest factors with the traditional factoring with a little bit bigger amount. And of course, we can add, thanks to microservices, insurers, debt collectors,
Yeah.
payments. This is how it works, and this is the perfect form of embedded finance.
Thank you. Thank you. Yeah, it is. And it's really cool because you use, it's like first, I don't know exactly what you do in the different areas, but in the finances, commerce for financial industry, it's when you are not only the IT company, but you also have your own product. This is great.
Exactly.
Before we go, Jan, to the question to you, I just like to encourage everybody, if you have any questions to our panelists, here are 2 microphones on the left and on the right here in the room, plus online. I have still here our chat, our SME Banking Club Q&A online. So if you have any questions, you can ask them online or here in the room. So we have some time for these questions from you, our dear audience. Jan, your company is supporting merchants with financing in e-commerce. So it means that the finances are exactly where the customer is. So how you see and how you define this embedded finance and this, could you tell us more about the company, and then we will move to some numbers.
Okay, so thanks for having me here, first of all. Maybe I will jump back. What is the embedded financing? Because everyone is talking about it.
Exactly.
I think, and why is that so important from the, I would say, from the global economy, from my point of view? So embedded financing, from my point of view, means that non-financial services or companies or any company in the world can easily offer financial services. And that's because the technology allows it. Simple thing and super simple thing with one of the biggest impacts on the global economy ever. That's the reason why embedded financing in 2030 is going to be $7.2 trillion market.
Wow.
And it's really important, and because from the customer point of view, it's super easy. It must be invisible thing, But the key difference is that any customer, any merchant, anyone can easily find the right financial product in the place that before was never, there was no way how to find this,
Yeah.
So they're just trying to explain what's the core effect of it, So this is just how we understand what embedded financing is. And what Lemonero is and what we do and how we are a part of the ecosystem is that we build a digital lending platform for e-commerce businesses, for merchants, for SME merchants. So our customer is a owner or CEO of e-shop, that's the word using in Czech Republic, and Polish.
For e-commerce.
In e-commerce. Web shop, it's the Netherlands and Benelux. And online store, it's in US. So I always try
Really?
to use all of these 3 terms
everything
that
is
are really
e-commerce.
important to understand what I'm talking about. So. And we say, okay, because there is a huge problem on the market. 80% of these merchants, they don't have access to working and growth capital. That market is hugely underfinanced because of 2 reasons. If they go to the bank is unable to give them the money because of short history, too seasonal. They are not able to create the... you're from the bank?
Yeah.
And we have a Societe Generale as an investor, so I don't know.
So it's a competitor, so you can,
No, it's not a competitor. I think it's like we are the new player, bringing the money on the market. So banks are not able, because of old school ways, credit risk models, scoring processes, bring the funding to the merchants. That's the first problem. Second problem is, and that's the reason why embedded financing, is that it's super... You have to go there. It takes a lot of time. You have to go paper. Even the banks offering pre-approved online products. It's really hard in terms of the KYC, KYB, MLO to get access to that financing. These 2 problems. So that was the reason why we founded Lemonero. So we have a platform solve both of these problems. First one, we have AI-driven scoring model, able to predict. We work different kind of data from PSPs, from e-commerce platforms, from marketplaces, from social media.
Yeah,
more
because
than
you have the
15,000
access. You have also the access
exactly,
from the platform,
exactly. And
from the e-commerce
sorry
platform.
for the long answer, but I didn't have a chance for 15
No, we have
minutes.
time.
No, I'm just kidding. And so that was the first thing. We say, hey, we have to be able to disrupt the way how to validate the future performance of the merchants to be able to bring them the funding. That was the first thing. Thanks to this, we have approval rate more than 80% in the long tail of SMBs. So thanks to our solution, and thanks to data, and thanks to AI, we are able to bring much more money to much more businesses. And we provide working capital financing. So thanks to this, merchants and SMEs globally can easily use that capital for fast growing, for growing much faster than now. A second thing was that we have an onboarding process able to deliver the working capital, that capital in 8 minutes. From the first click.
Oh, 8 minutes, it's not so short.
Yeah, it is, including like a scoring model, scoring process, KYC, KYB, and all the stuff. You have money in 10 minutes on your bank account, and we have never seen before that customer. That's an important thing, you know. That I think we can bet on it. It's much faster. And last thing is embedded financing. So we are integrated as a white label solution directly in the PSPs in the back office of payment gateways, for example, or e-commerce platforms or marketplaces. So suddenly the owners of these e-shops are spending most of the time in their ecosystem, and suddenly in one click they can have access to working capital. That's one thing. That's the customer centricity, I would say. Second thing is that we already, on the data side, we are very closely connected via the API with the partners. So we have access to transactions data, so we can bring them like a customizable offer, pre-approved offer, you know. So imagine you're a merchant, suddenly say, hey, boom, we have up to 50K euros working capital financing in a minute. You could have in a bank account. And the second thing is that we also are closely connected in KYC, KYB process. So it means that you have just the 4 steps that you have to do. You don't have to send us papers, IDs, or something like that, because you already have it from the partner. And end of the day, you have money in your bank account in 4 clicks, in a couple of minutes. And that's the reason why the embedded financing is so super powerful. And without technology and data, we're not able to do in this. So end of the day, SME that's the way how we want to save the SME market in a global economy. That's the vision we have, because SME market, from my point of view, is like, and that's the conference about SME at all. 60% of GDP is generated by of European is generated by SME. So we have to, and also like from the statistics, the SMEs, they have a money for one, like I remember the buffer like for 1 or 2 months only. So they're super sensitive for cash flow. So that's the reason why we are here. That's how we're doing this. And for example, in Czech Republic, we cooperate with, we are active in Czech Republic, Slovakia, Benelux, opening Germany and France next year. And that's the way how we want to bring the capital to the market.
Cool.
And so that was like long story short.
Before talking about some numbers which you prepared, just like go back, Michał, how many minutes or how long it takes this process with the lease now?
It's minutes, I would
it's
say.
Also minutes.
Yes,
it's also minutes. No, I just like to emphasize it because like banks also, they go the same way. They try, because of such a companies like you or Komar, they also try to be faster as the competitors, you know, like on the market.
Yes, and also banks currently have more capital and to share with SMEs. So for a time being, I would say that there is a cooperation between the traditional way of thinking, selling of products, and the embedded financing, which is extending additionally the possibility to get financing in the market, I would say. So it's not that competition for us, it's more to have both of it and to be able to offer anywhere these products or these services to the clients when the need is happening, actually, because this is crucial, to be where the need is happening.
Exactly. Yes, please, Karol.
I think we need to also mention that we need to understand the client needs, because when I think about the micro companies, that they need their cash fast as possible, and they are financial providers, like factors, like fintechs that are able to do that. But when I'm thinking about the corporate client, I'm not sure right now they want to have the decision in 10 seconds, 8 minutes, something like that.
But not in weeks anymore.
Not in
weeks anymore.
And the question is it possible right now for the fintechs to make the decision in few minutes for 10 million euro? Because I'm not sure about yet. So I think we need to understand in which client we are talking about.
Of course, of course. But it also changed. Yeah, Michał?
I just wanted to add that SMEs are quite wild, you can say, as people. And from the entrepreneurial, you can have medium companies also who have bigger needs. So this is not like you can only, access and give the possibility to finance only for like 50K, because you can also access in our bank, for example, for like 2.5 million euro in 1 day. So, for example, it's possible also to get bigger amounts in quite quick.
Quite quick. Of course. Thank you very much for this. Do we have any questions here in the room, maybe? If somebody is a little bit shy, you can send your question online, even being here in a room, of course. I don't see any questions here online also, but I encourage, of course, our online audience. So let's talk more at the end about trends. So what is the future? And as one more time, Jan, having you here, as you just mentioned, you have the access to online data, what is going on this e-commerce, e-shop, and the third name was e-commerce, e-shop, market.
Yeah, sorry, yeah, e-shop, web shop.
Web shop.
Yeah, it's Benelux.
Web shop market.
Benelux,
so what is the trends? Where you see the trends? What is going on now on the market?
Okay, I think that maybe I will talk about two trends, like trends of embedded financing, which is like, I think it's growing super fast right now. And I totally agree that in future, I think, and it's not so far, I would say, you will not go to the bank only because everything is going to be online. I think you will go to the different ecosystem as well. That's a really important thing, you know. I think the future is that you will not need the banks and the branches, but you will need the bank as your backend solution and the capital provider, because I always say that the future of, I think, financial sector, and from my point of view, we are on the biggest banking and financial sector transformation in the last 100 years. It's going to be like fintech is a front end, and bank is a back end. That's how the future looks like. So this is like the trend is look totally like this way. So more and more embedded financing services from the researchers, like why we are cooperating with these types of platforms, marketplaces, e-commerce platforms, and PSPs is that there is 80% of penetration of SME market. It means that once you have a merchant, for example, in e-commerce, you're not developing your own online store. You're not, using your own payment gateway. You're using some, leading players in the market. So that's one thing. And there are free services that must be embedded as fast as possible. Lending, accounts, and the cards. These three things are, it's not my opinion, it's based on research. And so that's one trend, bright future, everything is beautiful right there. Now, SME market. Who's like, from audience, who's like a, I don't know, entrepreneur, or they have a merchant in SME?
I'm an entrepreneur.
Okay, and the rest of you are just in consumers, right? You're just buying the product and services from SMEs. Raise your hand. Who's buying any product or any service? And yeah. So information for you. Everything is beautiful. Spend your money. Don't be afraid. Go, go, go. The information from the merchants, it's not going to be so good, I think so. So you have to be because what we see in the data and the trends, like. Once I compare data year over year, the COVID-19 was like an atomic bomb to e-commerce in positive and negative way. And the positive was that industry started to grow incredibly fast. Easy reason, I don't have to say why. Yeah. But also it changed a lot the segments in e-commerce because suddenly the demands of the products was like, okay, health products and all the stuff, gaming, so starting to grow super rapidly. Luxury stuff, outdoor stuff, and all these things started to fall down. Yeah. So that changed a lot. And what especially was the negative impact of COVID was it totally changed. There was a huge bias in financial planning of these merchants. So because they expect, okay, we are growing, so the growth must continue in next years. So they started to order like the stock, like the products and buying the stocks on inventory and so on. So that was the first thing. And second thing is that suddenly the Ukraine situation, inflation, the macroeconomic situation, crisis is coming, and so on. So these four factors, these four things, the impact is that suddenly we see that the growth is definitely not so strong as in previous year. In terms of the numbers, the merchants in micro and small sector in SME. There is the merchants they are falling down for more than 50% in the revenue. It's from 5. It increased from 5 to 15%. So it's 3 times more super small merchants. They have problems, and also the rest. I think the the percentage of the businesses that are growing, I would say like 50 or 60% of SMEs still growing, but the growth is not so fast as the years before. There's like two key trends, and when you calculate it in these two trends, the wrong financial planning based on the bias that happened a year back, suddenly you have a problem that suddenly. So that is like key trends that we see on the market. But on the other hand, last sentence, positive one, I think there's a huge opportunity because once you're in e-commerce, for example, you don't have so fixed cost. You can be
flexible.
You're more flexible than the mortar brick stores, for example. So suddenly you have to be very patient in cash flow prediction. You have to be very careful how to manage your inventory management. And there's a couple of key, I would say, smart things like, okay, pricing, started to offer, and so on, so I can talk about later maybe. So once you make a quick action and you act like effective, you will act more effectively than before. You can be the winner of that crisis. So I think also in SME, the future is bright, but now we have hard times in next months. And my suggestion is be effective as possible in terms of the cost, and use the data and platforms like Lemonero to get the right financing in the right time, right place. Sales pitch.
Or
thank you so much.
Use your bank as an ING. Okay, as we are the last panel before lunch, so I don't like to be too long. So any questions from the room, maybe? Ladies and gentlemen, we have one question online. Amit, thank you very much for this question. I will read it. The new age lenders may lend faster with better UX probably, but more expensive than banks. Can it sustain? Smart questions. It's serving customers who can't get from banks. Yeah, this is like, I will make it a question maybe more general. This is, of course, the question is like, of course, the banks are cheaper because they have the access to cheaper money, which is obvious, yeah. But is it this, who will win on the market? Maybe the question to Michał and to you, Jan.
I was saying it before. For me, it's not about the competition between these two, you can say, companies in terms of banks and the fintechs. I think it's a cooperation in the future. And from my perspective, it's not that somebody's winning, somebody's losing. I think there's a place on this big market for everybody. And from a perspective of banks, of course, we not only, or I'm not fully agree that we have cheaper money, but we also have a very good processes. This is not that fintechs only can support with a good UX and very good fast processes, but banks can also do it. We are one of the example, I would say, not to be honest. And from my perspective, I think future is for everybody. And I'm not so keen that future will happen so quickly as my colleagues were saying, in the terms of that the traditional way of thinking will disappear so quickly, because we have very different type of behavior of clients. And for banks, it's crucial to be a bank for every part of the client. It's not that only very digitalized clients are the center. Of course, they are in the center, but there are other type of clients which are also in the market and they want to be served. Yeah. Thank you very much for that. Exactly. Jan, one word at the end?
It's all about, I think I'm answering the question if it's sustainable. We have 80% renewal rate, so retention rate. So I think it is, from customer point of view, that's the most important thing. It's all about I think it's about three parameters: cost of capital, risk cost, and I missed the third one. Doesn't matter. So an ROI, like return of investment. It means that, once we provide for working capital financing, even it's a bit more expensive than the banks, but we can be more, I would think, precise of the risk cost because of better data and better prediction side. You don't have to be, it could be the same price at the end of the day. You know what I'm trying to say. You have to be, you need to disrupt something on these three things. So once we have a super effective distribution channel via the partners, we have a lot of data that we can use for validation of the risk profiles. So we are able to bring more money to more businesses, but with lower risk costs. Yeah. And because we have definitely more expensive cost of capital than the banks, we have to still think about our clients. What once they're using their capital from us, or the pricing that we offer is still relevant for them for using it for the relevant return on investment.
Understand.
It's super simple in that way.
Thank you very much for that. Chris, one word.
Just one brief word. I think we were talking about what comes next, and I think as we were talking here, the last couple of years where fintech was arising was about cheap money dispersed fast, and now it's really more towards smart lending, collection, working with clients as they have problems, and figuring out how we get with clients together through this crisis that is just starting, but will certainly increase based on the fact that left and right, all these new innovations are exploding around us, and financing will get more expensive. And yes, indeed, we're heading to a recession next year globally, so we have to figure out ways to work with these clients and make sure that our experience and our data helps us working with them, as opposed to just simply dispersing the next loan.
Thank you very much for that. Thank you very much. Thank you, Chris, Michał, Karol, and Jan. Thank you very much for your presence, and